Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 3rd of June, 2023. And we're publishing our gold and silver weekly update for the week ending the 2nd of June. Last week we saw, frankly, by the end of the week, very little change in gold and silver prices. Though Friday was quite exciting in that they had risen up until that date and then fell quite dramatically towards the latter half of the day. Why did this happen? Let's take a look. Now first, just a quick reminder and a request. We've set up a second channel entitled Finances Do Matter and have provided a link in the description box and in the comment section below. In just a few months we've gained 5,000 or just short of 5,000 subscribers. We have over 80 videos on the channel, and when we reach 10,000 subscribers, which we're targeting to achieve by around September at the latest, we'll embark on interviews and live streams. So if you're one of those listening to this and haven't subscribed, then we would be most appreciative if you did so. Meanwhile, going back to what happened last week and what we expect to happen this coming week, gold rose $1, wait for it, $1, rising from $1,947 to $1,948. It did rise as high as 1983 and as low as 1932. So that's an overall rise of just 0.06%. In sterling terms, it was down £10 at £1,568, and in euros it was up €2 at 1,820 euros. Silver rose 29 cents, rising from $23.34 to $23.63, having been as high as $24.04 and as low as $22.94. So a rise of 1.26%, slightly better of course than gold. In sterling terms it was up 9p at £19 and a penny. It seems to like this £19 level. And in euros it closed at 22.12 euros, that's up 0.32 euros. The gold to silver ratio of course therefore fell from 83.4 to 1 to 82.4 to 1. Now the difference between gold's high and low was $51, and the difference between silver's high and low was $1.10. So not particularly an exciting week as far as price movements were concerned. And this fitted in with our forecast. We anticipated gold would trade between 1900 and 2000 and silver between 2250 and 2450, and both did not disappoint and did as forecast. Looking briefly now at other financials, Bitcoin is up $465 at $27,166. Equities improved for the week, but mainly thanks to Friday's performance. The Dow Jones closed at 33,762. That's up 669 points. The S&P 500 closed at 4,282. That's up 77 points. And the Nasdaq Composite closed at 13,240. And that's up 265 points. Now, oils were marginally lower, with Brent crude down 82 cents at $76.13, and WTI crude at $71.74 was down 93 cents. Now, the dollar index currently stands at 104.01. That's down 0.19 points on the week, but an improvement compared with Thursday's close, which was a half a point lower than that again. In terms of economic data announcements last week, we saw consumer confidence increasing for May by 3 points. US job openings increasing in April, and an incredibly strong ADP employment report on Thursday, with an equally strong US employment report on Friday. The latter showing that 339,000 new jobs were created in May, compared with 294,000 in April, and expectations of only 190,000. That said, however, this report was balanced by an increase in the US unemployment rate for May to 3.7%, compared with expectations of 3.5% and 3.4% figures in April. Now, the reason for the apparent discrepancy between so many new jobs created but yet an increase in the unemployment figures is put down to a sharp increase in the number of people who claimed that they were unemployed, because it is done through reporting, and partly because more people actually entered the labour force. Now, with a strong ADP report and employment report, one would expect the Fed will increase rates in June, though everyone had up until then anticipated a pause. But the uptick in the unemployment rate, coupled with an increase in wages over the past year slowing to 4.3% compared with 4.4% and a peak of 5.9% last year, suggests that there still could be a momentum for a pause due to the lag effect from the recent interest rate rises, requiring additional time for them to work through the economy, because the last thing the Fed wants to do is to drive the economy into recession. So far, at least, the figures do suggest that any recession predicted for the US has at least been temporarily delayed, if it occurs at all. Now, this coming week, we have a little more, but not a huge amount of important data announcements coming out of the United States. On Monday, we have the S&P and ISM services PMIs for May and factory orders for April. We have on Wednesday the trade deficit and consumer credit figures both for April, and on Thursday the initial jobless claims. However, it's the following week that will be crucial, when we see the CPI figures on Tuesday, followed by the producer price index on Wednesday, and then a few hours after that the announcement by the FOMC of its interest rate decision. So let's now address the issue of gold and silver prices. Both rose and peaked for the week, late Thursday, early Friday, only to fall back a little towards the close of trading. Undoubtedly, the markets have factored in, at least for now, that interest rates will not rise on the 14th of June, which is why we also saw quite a nice bump in equities on Friday. As far as gold is concerned, from a technical standpoint, it closed just below the 61.8% Fibonacci retracement level of $1,952 and suggests a fall to the 78.6% retracement level of $1,943, with gold closing only $5 above that level. The swing low rests at 1,932, and should that be broken, then it could suggest that the upward trend has now reversed. Now, Friday did see a marked fall in gold as sellers were quite aggressive from around 1 p.m. GMT. However, that said, it's difficult at this stage to see gold falling much further, as there are support lines at $1,930 and $1,915. And currently the betting so far is that the Fed will pause rates on the 14th of June. Of course, the CPI figures announced the day before will probably be determinable. With the US dollar remaining strong, the upward momentum for gold is also limited. And again, it is difficult to see what could push it over and above this past week's high of $1,983 this coming week. Silver followed gold but performed a little better, in that the envisaged economic recession may now be delayed, thereby increasing the potential for higher industrial demand for this metal, which stands at around 60% of total demand for silver. It has support levels at $23.50 and $23.25, and strong support at $22.90. Its ultimate support, in our view, of the next week or two will be around the 200-week EMA, which rests marginally above $22. To the upside, there is extremely strong resistance at $25 and ultimate resistance, in our view, at $26. But again, like gold, it's difficult to see what's going to be announced this coming week, which could push either metal above these resistance points or below their acclaimed support levels. So with this in mind, we forecast that for this coming week, we anticipate gold trading between 1900 and 1990, with 1875 and 2025, just in case something is announced, as outliers, and silver to trade between $22.50 and $24.50, with $22 to $25 as outliers. What do you think? Please do share your thoughts. And before we go, just a final reminder, we've placed a link in the description box and comment section for our Finances Do Matter channel. But meanwhile, as you are here, we'd appreciate it if you would give us a thumbs up, subscribe, press the bell sign, and most certainly comment and share your views as to where you see gold and silver prices going this coming week. Meanwhile, thank you for listening. Have an enjoyable, safe weekend, and as always, a prosperous week ahead.